Welcome to the Growth Experts Podcast. I'm your host, Derek Colin. In today's episode, we have a very special guest. Her name is Tanvi. She is the investor with Intuit Ventures. How are you?
I'm doing well. How are you, Derek?
I'm good. Thank you for asking.
Mhm.
So can you share a bit about your role and how it fits into the bigger picture at Intuit?
Yep, of course. So I work at Intuit Ventures, which is Intuit's corporate venture arm. And when you think about corporate venture arms, they serve a wide variety of functions. I like to joke that every CVC program is its special little snowflake. So here at Intuit, we invest with a blend of strategic and financial outcomes. So we are underwriting for a financial return, but the companies that we're investing in have to have some relevance to our customer base, the areas we operate in, or our products. And so, really, the goal of the program is to drive strategic learnings for Intuit as a company and hopefully make some money alongside that. So, that's my day job. And outside of that, I run a community called VC Unleashed that's focused on increasing access to VC for founders and aspiring VCs alike. We've got over 2,000 folks in our Slack, and we're hosting our annual conference this July.
Oh, very nice. This July, I got to come check it out.
You got to come check it out. It's just a short flight up in Oakland from you.
Oh, Oakland, yeah, awesome. What's the investment thesis? Are you guys industry agnostic? What type of industries do you go after on the VC side, or when it comes to Intuit Ventures?
Yeah. So at Intuit Ventures, if you think about our products, which are QuickBooks, MailChimp, TurboTax, and Credit Karma, as well as our customer segments, which are end consumers, SMBs, and now increasingly mid-market customers with the launch of our IES enterprise product. We primarily look across fintech, verticalized solutions in areas where we have a QBO concentration, enabling technologies, so things in HCM and payroll. We actually have a pretty big payroll business that people don't realize, as well as all things consumer fintech and e-commerce, MarTech. So that's broadly how we invest. I would say with how quickly innovations are moving with AI and in general in the market, a lot of things that you don't think could be relevant actually are relevant. So use-based billing is a great example of, now Intuit is itself an AI company. So something that can teach Intuit how do you price and how do you bill for usage-based consumption, something like that's also relevant and interesting.
So what major shifts are you seeing in your industry right now?
Well, I mean, like everybody else, I have to talk about AI. And I think it has a lot of really unique and interesting implications for the industries where Intuit and where I spend a lot of time. I think we're seeing a ton of application layer innovation. So in our area of the house, that is, accounting automation, bookkeeping, transaction categorization, creating, draft GLs. We see a lot in invoice to cash and order to cash. We see a lot in kind of data standardization and aggregation so that you have better visibility into how each of your products are performing on a profitability from a profitability perspective. So seeing a lot of that and really seeing this across the board when it comes to back office tasks like the ones I mentioned, as well as payroll, seeing quite a bit there, and recruiting, HR. And so really, I mean, like everybody else has said, I think AI is pretty much rewriting how you get work done. And I think when you're looking at it from a company, like a startup perspective, it's always really interesting to balance, well, what is this company's edge over OpenAI or Anthropic, as well as how they're going to kind of beat out competitors who have access to the exact same tools. So I think the other piece that's changing is you really, really, really have to have a killer go-to-market and customer acquisition. In the past, my kind of lens was you either have a really strong product or you have a really strong go-to-market, and you can win with either of those. And now that it's so much easier to build a product and there's everybody has the same building blocks, you no longer optional to have a killer go-to-market in a lot of areas. Like if you think about the GEO space, which is where your brand is being represented by Anthropic or by, Claude and ChatGPT, like there are a bunch of tools like Profound, Bluefish, et cetera, in that space. Like the entire acquisition there has just been a land and grab. So I think those are some of the different dynamics that I'm seeing.
Yeah, definitely. So how has this trend comes to AI, fintech, and implementing it to enhance people's positions? How has it helped, your growth strategy in your business or impacted?
Yeah, I mean, I think across the board, you are expected to do more with less time. And
Mm.
certainly having access to these tools has made it much easier to do that. I do think you get to a point where you over rely on these tools, though, and you kind of read what they write or the analysis they do, and it's completely wrong. So
Mhm.
I think, like everybody else, you have to, kind of create the right cloud skills and create the right tooling and infrastructure, which obviously takes time just to
Yeah.
make sure you are set up for success. And I think a lot of the frameworks that I hear around, deliver 3x with half the time is pretty flawed. I think you really get to refocus where you spend most of your time with how things are going. And it's been really nice to automate some truly like mundane and like hair tearingly boring work so that I can focus on more fun and more interesting tasks.
Yeah. That's good. So it enhances your capabilities for, I would say, speed, makes it so that you have a better work-life balance in some ways, and you can maybe allocate your time towards things that are more important or focusing on customer acquisition and things of that nature.
Yeah, yeah, that's right. I don't know if
Hmm.
it's necessarily leading to better work-life balance just yet, but
Yeah. Yeah.
once some of the hype calms down, I'm hopeful it will.
Yeah. What's working well for you right now and what's been frustrating?
Yeah, I think what is working well is just the ability to, again, like automate some of the really boring and like time-consuming tasks you have. I think seeing that get done, being able to allocate your time differently is working really well. And I think on the flip side, it's hard and it's kind of expensive to figure out how to use these tools accurately. Like it takes you some time to like toggle between the models and understand which tasks do you need a higher quality model for that you pay more for versus you don't, to really figure it out. And like, the AI can guide you to a certain extent, but unless you ask it, tell me what questions to ask you, it's not going to ask you questions like that. So I
Hmm.
think that part is not working well. I think there's a lot of AI fatigue that's happening. I think people are sick and tired of hearing about it. There's a lot of like anxiety and angst that's coming from it.
Hmm.
So I think, like everything it giveth and it taketh. And I do think we're at a period of time where a lot of this is overblown. And as things settle into more of day to day, it'll just feel better, which I'm hopeful
Yeah.
for. Because I'm also on the receiving end of all of this angst.
Yeah.
Yeah. How about you? What
Yeah.
are you finding in your work, and how are you feeling and experiencing all of this?
Well, I think on the consumer level, when people are using like Anthropic or Cloud and they're using ChatGPT, OpenAI, they're, using these as a means to filter better processes for them. And you can integrate certain tools, but there's all these other third parties that you have to use when you're connecting certain nodes or workflows, if you will, to really set up a customizable system that's going to work. But yeah, there's your typical consumer where they're, just using it from a consumer level to prompt the AI, and then there's hallucination, and it's causing a lot of time that's being used and spent in terms of time management, where someone's like constantly trying to perfect a certain outflow of things when it comes to AI and prompting, if you will. And that's where they will either hire teams and IT support or an AI engineer to come in and build something more customizable and proprietary so that it can be run or managed on the back end by someone who kind of knows what they're doing when it comes to those integrations, whether it's for deal flow or it's for automating certain tasks or scheduling, or electricians that are missing calls and they're not able to get those contracts that they're missing out on because they're so busy. And that's where automation or AI or bots or something like that will come in. But so from the versus the consumer side, then there's, big companies that would want to, hire someone like an AI engineer to come in and really build something customizable for them, whether it's for cross pollination throughout, like for example, a PE's portfolio or VC, and they have these companies and they want to make sure that they're being managed correctly, and they have better customer retention or things of that nature. And with cross pollination, where you can go into these portfolios and you can make sure that there's automations and workflows and things that enhance, whether it's an analyst working with 50-page documents, CIM or PPMs and things of that nature, to where it's a plug and play, and then it's just managed with small maintenance and IT support. So there's companies that I think are kind of moving away from the rented software as a service models, where, it's just an off the shelf kind of service, and people are doing subscriptions, and they're looking more towards proprietary custom builds. If you have any experience with that, or if you've seen in the market where people are moving more towards away from the software as a service rented model, but that's what I'm saying. Yeah.
You're seeing a blend of SaaS and usage-based fees. I don't think we're moving fully away from SaaS. I think what we are moving away from is a seat-based pricing approach, so seat-based SaaS to more of a platform SaaS fee. And I do think a lot of startups are using these FDEs, the forward deploy engineers, to deliver some of this customization that you mentioned for the companies. And that's a bit of a recurring trend as well.
Yeah, it depends on the industry. Some software as a service platforms that people can use may be beneficial to them, whether it's like e-commerce or certain things where it can be automated, and fintech can come in and look at and do a financial analysis. So whether it's for manufacturing and see where there's a bottleneck or certain pain points, maybe they can improve profit margin and things of that nature. But yeah, I don't know. Yeah. So yeah, I mean, it depends on the industry if someone's looking for something more proprietary.
I mean, these are all such early signals. It's a little hard to say where it's going to go, but I do think, SaaS pricing is kind of like everyone still charges it, and like to an extent, from an investor's lens, you want something that has repeatability and consistency in pricing, so you can accurately forecast the revenue. And I think that does end up being, and it is interesting, right? It's going to see if we do kind of have a burst of the bubble, how is that going to impact the revenue of all of these AI companies that are largely usage based? That's how they're monetizing. So I think, it's still so early that we have yet to see the shoe to drop to understand what is repeatable, defensible, and like what is a good business model. And we shall see if and when the shoe does drop and where things land.
Yeah, and there's certain models that can be more customized for learning language models, to where you don't have to always use like Open AI and ChatGPT or Gemini or
There's a lot
Perplexity.
of open source models too that are free. They're not quite as good quality, but
Yeah. Yeah, definitely. So when an issue like arises, when does someone typically pull you in? Is it like a CEO, a founder, or an investor?
yeah, we're a small team, so we are not necessarily taking board seats, and a lot of the support we deliver is based on what the company wants and needs. We
Mhm.
typically come in around the early growth stage, so Series B, and founders by this time are typically pretty experienced. So we support and help them with customer intros, help them think through their go-to-market, and we're here, as and when they need it. So I typically will let founders reach out to me when they need it, when they need something,
Mhm.
and we do quarterly touch points. So I am talking to the founders on a consistent basis, and we'll flag things they should rethink as I discuss with them.
Cool. And when you're investing in these companies, is it more like a long-term play, like wealth management, kind of like a family office model, or you guys are in and out once you kind of see the return, or how does that work?
Yeah, we certainly are longer term investors, given we have a strategic angle to our investments. Learning about what a startup can teach you as a large company takes a few years. You obviously learn a lot that's relevant to the company through just the diligence process itself. But when we make an investment, we have a strategic case and we have a thesis on what we think we'll learn. And it usually takes a couple of years at the very minimum for that to play out. So we definitely are long-term investors. We're not typically, selling our shares in secondary markets or anything like that. We don't have too advanced of a capital market strategy, but, as the team scales, who knows?
Comes to the funding model, is there like a mid cap type of, well, you said Series B, but is there a certain investment thesis? Is there a certain amount that you guys kind of cap at, or is it, you invest 10 million here, 5 million there? How does that work? Is it self-funded from Intuit, or do you guys go through lenders?
Yeah, we're balance sheet investors, so we go off of Intuit's balance sheet. And as a ventures team, we aim for a diversified portfolio. So right now we're looking across just traditional core fintech as well as AI application layer, because I don't know, at the end of the day, you need a loan. Like, you
Yeah.
have some part of the that AI, at least not of yet, has automated. So portfolio construction certainly aim for diversified and risk adjusted in that perspective.
Mhm.
And we're writing minority checks, so we don't price rounds. So typically we do $3 to $5 million checks, and I think 10 million is probably the most we would ever do if we were really, really bought in on a company.
Oh, cool. Awesome. All right. So what do you want people to know about Intuit Ventures or the other side of the coin in terms of what you do, VC side, if they were to come to you for help?
Yeah, I think a little bit of what I shared earlier around how every corporate venture program is a little bit different. I would encourage founders to try to figure out what is it that the specific person and their program, like, what are they looking for and what does success look like for them? I think you learn a lot about the type of support you'll get from a CVC program in that, and you know how to best use them. Like, some CVCs don't want to talk to you unless it's about their company. I would say I'm different. I'd love to chat with you about everything that's going on in the BU. And in fact, it's a little frustrating to only be seen as, your Intuit person, and only be asked questions about that. So I
Yeah.
would say, feel it out, and to the extent you can, just create a perception of the person based on the conversation rather than like their title or where they work. And then the last piece I would say is I've seen like hundreds and hundreds of startup pitches in terms of partnering with Intuit. Like, everybody wants to work with QuickBooks, and
Mhm.
every single discussion I have with founders, I hear all about the value for the company, the startup, like why it would help you, what distribution you want. And at the end of the day, even when I ask the question of, okay, great, well, if everyone wants to work with QuickBooks, why should QuickBooks work with you? It's
Yeah.
always surprising to me how few founders actually have a good answer for that. And
Mm.
honestly, I can tell sometimes when I'm asked that they've never even thought about that. So,
That's a good
yeah,
one.
I think yeah, I was like, well, hey, next time you're having an enterprise partnership, why don't you come to me? Let me coach you on the proper way to say that. And I think that's just a broader like push and ask to the founders or any of the folks who are introducing me to founders of hey, what's the value to me? Like, come to me with the proper pitch. Otherwise, it's just, I can't really help you.
Yeah. Yeah. So where do you want Intuit Ventures to be in the next 6 to 12 months from now? Where do you see it heading?
Yeah. Well, we are locked and loaded. We're making investments. So I'd love to see us continue the momentum. And I'd love to see us make just more deals, more bets, and continue commercializing our opportunities either with Intuit or with other companies.
Awesome. Very cool. And you mentioned the goal is to continue growth and looking for more deals. If you had a magic wand and to fix just one thing in the business that's holding you guys back or slowing you down, what would that one thing be?
My gosh, how can I pick just one thing? We're a huge company and a huge business. I will say one of the things that I'm most interested in spending time kind of thinking about is budgeting for AI tools and like forecasting token costs. So I would love to hear how folks are thinking about that, either at an enterprise use case or just for an SMB or a mid-market company. I actually think it gets a lot more interesting with SMBs, just
Mhm.
because they're not as maybe like they're not tech companies and they're not doing things there. And I think broadly, I'm just excited about AI companies that are targeting like home services and like,
Mhm.
I don't know, like a construction company and like real world businesses.
Yeah, very cool. Awesome. Well, thank you so much for joining us on the Growth Experts Podcast, Tanvi. It's been a pleasure. If you guys want to locate her, she is on LinkedIn and she has a profile there, so you can look her up. Also, if you guys are interested in the investment world and you're looking to get an investment or actually have a consultation, you can go to intuit.com/ventures. That's intuit.com/ventures. Thank you.
Thanks so much for having me, Derek. And if anyone's interested in learning more about VC as a career, come to our Shift VC conference that VC Unleashed is hosting in July.
Awesome. Yeah.